Good morning and welcome to the Killick & Co Market Update. This week we've seen lots of comments about Tesla in the press, and all because Elon Musk posted a tweet saying that he wants to take the company private and that he has the funding to do it. First of all, he shouldn't really be tweeting about things like that. It probably does count as market manipulation. It did cause a spike in the share price, and also later it did turn out that he hasn't secured the funding to do it. But that aside, it does raise some interesting questions about why he might want to take the company private. Now, one issue that he has quite a long-term vision for Tesla, and he has been quite annoyed at the fact that some investors have a focus on shorter-term profits. And he's also been quite annoyed about the volatility in the share price over the last few months. So as you can see here, this is the 12-month share price. It has been quite up and down, and we have seen a number of 20% swings in the share price, which is quite significant for such a large company. And thirdly, he is quite irritated that so many people continue to short the stock, and that's only possible because it is listed on the stock exchange. So all of those issues would probably go away if he was able to take the company private. But let's have a look at just how much it could cost him to do that. Now, for this, we look at enterprise valuation, which basically adds up the value of all the shares and all the debt. So basically all these securities that you would have to buy in order to own the company in its entirety. So for Tesla, the enterprise valuation is $75.5 billion. So it's a very valuable company. It's worth about half the value of Ford and about twice the value of Tesco. And if Musk was able to take the company private, that would count as the largest ever leverage buyout in history. So it would be a very significant deal. So it would be quite interesting. So do keep an eye and see if that does go ahead. And also this week, we've had some quite strong results from a company called Ørsted. Now, this is a Danish company focused on renewable energy. It's the global leader in offshore wind, and about 44% of its revenue comes from the UK. And because those results were so strong, we've been looking at the latest breakdown of power generation in the UK. So have a look here at the results from 2017. And it's quite interesting to see that now over 50% of our power generation comes from clean energy sources. So that includes nuclear power, and it also includes renewable power such as solar and wind. And in 2017, 14.6% of our power generation came from wind. So I think it is quite clear to see that offshore wind is becoming an increasingly important energy source for the UK. And thirdly, this week, there's been quite a lot of talk about different currency movements. Firstly, about the weakness of sterling against both the euro and the dollar. And that's largely because people are concerned about the possibility of a no-deal Brexit. And then also we've had a lot of talk about the extreme weakness of the Turkish Lira against all global currencies. So have a look at this chart here. This shows the pound against the dollar, the euro and the Turkish Lira. It shows them all rebased to 100 starting from 1 year ago. And then the axis on the graph shows the percentage change in the value of each currency against the pound. So first of all, let's have a look at the blue line, which is the dollar, and the green line, which is the euro. As you can see, over the first part of the last year, the pound actually strengthened against both those two currencies, but since then it has lost value, and really we're pretty much back where we started exactly 1 year ago. However, the pink line shows the Turkish lira, and you can see that the pound is now worth more than 50% more than it was against the lira 1 year ago. So the Turkish lira really has weakened quite considerably. And that's because many investors are quite concerned about the Turkish economy. They're concerned about the level of debt that the country has and about the high level of imports that the country relies on. And actually the weakening of the currency is almost a perpetually vicious circle. So the country has lots of debt. A lot of that debt is denominated in foreign currency. So as the Turkish lira weakens, it's going to cost more for Turkey to service its debt. And also because the country relies so much on imports, as the currency weakens, that means those imports are going to cost Turkey more. Now, normally in this situation, when your currency is weakening, it's quite usual to raise interest rates to attract more capital back to the country. However, the president of Turkey has said he doesn't want to do that, and he's even described himself as an enemy of interest rates. So I think that is causing some concern for economists. So things don't look too good for the Turkish economy at the moment, but if you are going on holiday to Turkey, you will find that things seem a lot cheaper than they did 1 year ago. Now, moving on to the week ahead, we're coming to the end of reporting season, so not a huge number of companies reporting next week, but we'll be looking out for results from copper company Antofagasta, insurance company eSure, and Chinese internet company Tencent. That's it from us. Have a great weekend, and we'll see you next Friday.